Hello everyone, this is George Michigan. Thank you for attending this webinar. Before I start, I just want to touch on this disclaimer and give you a chance to read it. So I'll give you a couple of seconds here to go ahead and read the disclaimer before we move on with the webinar. Okay, now that we got that out of the way, I just want to make one more comment about the best way you can get the most out of this webinar. So please shut down all other programs on your computer, and please no multitasking during the webinar. Turn off your cell phone and don't let anything or anyone distract you or disturb you, because I am about to explain to you in very details my trading strategies. Also, I do have a free bonus for you if you stay with us to the end of the webinar. So let's go ahead and start. All right, here's what it's all about. We're talking about generating income through scalping the E-mini S&P market. Now you say, why scalping? Well, first of all, E-mini S&P is one of the best markets to scalp. It is believed that over 70% of daily volume in the E-mini S&P market is contributed to high frequency traders. And most of these high frequency traders cannot scalp. They have to swing trade or position trade. They are simply just too large. This creates huge advantage to the small trader. And when I say small trader, I'm not talking about the person who trades one lot or two lots. I am talking about people who trade all the way up to 200 or 300 contracts at a time, was still considered small compared to these huge mega funds that swing trade these markets and take the market from one extreme to the other. I will explain to you my scalping strategy in detail in just a minute. But first, I want to tell you what qualifies me to teach you anything about the S&P market. Who am I, and why should you listen to me? I have over 35 years in trading experience. I was a young floor broker in Chicago when the big S&P futures contract was introduced back in 1982. I have started trading the ES, the NQ, the Mini Russell since their inception. I've been a professional day trader. I have I've been a hedge fund manager, and I owned my own futures brokerage firm, which I sold. But most importantly, I have successfully taught traders all over the world, from Australia to Europe to the Middle East and the Americas. Now, I'm not telling you all of this to impress you, rather to impress upon you that what I'm about to teach you is my lifelong work. I have developed two strategies to scalp the E-mini S&P market. One is the reversion, the other is momentum. Now, the reversion strategy generates signals in the opposite direction of the trend. It's a scalping strategy, but it scalps in the opposite direction of the trend. The momentum, on the other hand, generates signals or scalps in the overall direction of the trend. Today, we are going to concentrate on the reversion strategy. Now, both strategies are available on two different platforms, TradeStation or Ninja. So you need to have one of these platforms. If you don't, that's perfectly okay. You can always get the signals from logging on to our members room, which is open 24 hours a day. Now, the reversion strategy. Let's talk about the reversion strategy and tell you exactly how it works. I'm going to explain to you the type of bars we use in the strategy, the indicators that we use for the strategy. I'm going to show you how the strategy generates the buy and sell signals. And very importantly, I want to talk about the unique risk management settings that I incorporated in my strategies. And then I'll open up the session for Q&A session, and we'll do a quick wrap up. All right. First of all, the type of bars we use to trade the reversion strategy is what I call range bars, or TradeStation calls them momentum bars. They're the same. Here's an example of a range bar or a momentum bar. They're the same. I will be calling them range bars from now on. We use two-tick range bars most of the time. Two-tick range bars, here's an example of that. Basically, as you can see, those bars are not based on time, they are based on price. Here's an example. You can see this one bar trading from 1696 to 1695.5. So this bar will stay in place. It doesn't matter. It could be 1 minute, it could be 5 minutes, as long as the prices are fluctuating between 1695.5 to 1696. That's 2 ticks. The bar will stay in the same place. However, the very same second that the market moves away from the half a point range, either up or down, in this case, it went down, it starts a brand new bar, as you can see right now. And that bar will stay in place for exactly 2 ticks, half a point. In this case, 95.5, and it moved higher. So as you can see, that moves higher and higher and higher. So you can see that this is based on prices as opposed to being based on time. So we use range bars to trade our reversion strategy. Here's an example of the reversion strategy. As you can see, the reversion strategy gives us buy signals and exits, then sell signals, exits, short signals, exit, long signals, exit. So you can just follow the strategy if you want and wait for the buy and sell signals to generate it on the strategy to take the trades, or you can also look at the both indicators that generates the strategy and know when the strategy will be generating the buy and sell signal. I'm going to explain to you in detail exactly what the indicators do and how we generate these buy and sell signals. So the reversion strategy has 2 indicators, reversion TE and reversion exit. Here's the reversion TE. Reversion TE is an oscillator. As you can see, it's oscillating around plus 20 and minus 20. Whenever the oscillator reaches a minus 20, we're going to see green dot, right? Green dot, green dot. And whenever the oscillator moves higher to plus 20 territory or above it, we're going to see a red dot and red dot. Again, these dots are just in place so we can fairly spot them fairly quickly. That's the reversion TE indicator. It's an oscillator. It looks very, very simple, but under the hood, it's anything but simple. In the old days, I used to stack up many, many indicators, a lot of them proprietary indicators, to come up with these signals. But eventually, what we did is we combined all these indicators into one simple-looking oscillator, which we named it the reversion TE. And TE stands for trend exhaustion. So this is a combination of many, many indicators, proprietary indicators, and filters, put them all together to give us this unique looking, but simple looking indicator. The second indicator is something called reversion exit. Reversion exit indicator is an indicator that, just like the name implies, we only use for exiting the trade. So we don't pay attention to this unless we are in a position. And the way it works is basically, it's you can see their histogram, just columns above 0 and minus 0, and they oscillate between minus 1 and plus 1. Whenever the oscillator reaches minus 1, we're going to see green dot. Whenever it moves higher to plus 1, we're going to see a red dot. Again, I will explain to you in detail how we use these 2 indicators. Here's how the chart looks when we combine both indicators together. Okay, let's take this one buy signal, expand it, push it on the side, and let's go analyze it. I'll tell you exactly how the buy signal gets generated. Okay, here we go. For a buy setup, all we're looking for is the reversion TE indicator becoming green, basically moving to below minus 20. Here it is. You can see this indicator at the bottom right, reversion TE indicator, giving us the green dot, moving down to minus 20 or below. The bar that's responsible for producing that reversion TE indicator reading of minus 20 or below, or giving us a green dot, we call that a setup bar. You see the setup bar. This last red candle is a setup bar. So basically the setup bar is the bar that produced the green dot on the reversion TE indicator. Once we have a setup bar, basically the market's telling me I should be in the lookout to enter a long trade, or a buy signal is about to pop up on my strategy. Once I have a setup bar, I'm looking for a trigger bar. The buy trigger appears when the bar following the setup bar trades one tick below the close of the setup bar. Okay, here's the very next bar. So here's the setup bar, which is the bar responsible for giving us the green reading on the reversion TE. And then we have the following bar, the bar following the setup bar, that trades one tick below the close of the setup bar. As soon as that happens, a buy signal pops up on the screen automatically. Okay, just like this. Now, two arrows appear with that, one vertical, one horizontal, telling you exactly where that signal appearing, along with the word buy, as you can see, and in my case it says 2, right? Buy 2. The reason it says 2 because I'm keeping track of 2 lots, and I will show you exactly in just a second. If you're trading 1 or you're trading 15, it doesn't matter. Whatever you're trading, that's the number of lots going to show you. All right, just so I'm explaining to you the mechanics. So if you don't want to look at the indicators, that's fine. The buy signal is going to pop up and you can take the trade, or you could watch the indicators develop and you could see when the buy is about to appear on the chart. Now, once we are in a long position, I will explain to you the stops in just a second, but let me just move forward and show you the mechanics of the exit before we talk about the stops. I'm just showing the mechanics right now of the exit. To exit that long trade, now we will pay attention to the exit indicator, which is this bottom indicator here, right? So reversion TE gives us signals to enter the trade. Reversion exit tells me when to exit the trade. And the way we do that is when the reversion exit indicator moves to +1 reading, basically gives us red dot right here. So as soon as the reversion exit indicator moves to red dot, the bar responsible for producing that signals is what I call my new setup bar. So the setup bar is basically a new bar that produced the red dot on the reversion exit indicator, telling me I should be in the lookout to exit that long position that we have. Once we have a setup bar, now we're looking for a trigger. The trigger, again, in this case, is the bar following the setup bar that trades one tick, in this case, above the close of the setup bar. Remember, the trigger is always one tick better than the setup bar. So in this case, the following bar has to trade one tick above the close of the setup bar. And as soon as that happens, an exit signal will pop up. So here's my setup bar, which is the bar responsible for producing my first exit indicator. And here is my following bar, trading one tick above the close of the setup bar. As soon as that happens, an exit signal will pop up on the screen with the number 0 under it, telling me my position should be flat and the trade is complete. Now again, I did not cover the stops. I know that. I will cover that. I promise you that is the most important part of the strategy. I'm just explaining to you right now the mechanics of the indicators, how the indicators work, and how those buy and sell signals get generated on the chart. They're not just appearing magically. Okay, so that was the long trade. Let's take a short trade. Again, let's highlight it, expand it, push it on the side, and let's analyze that trade step by step. For a sell setup, we are looking again on the reversion TE indicator, and we want our reversion TE indicator to give us a red reading, +20 or above. As soon as the reversion TE indicator moves to +20 or above, or red dot, we know we should be in the lookout to enter a short trade. Again, the bar responsible for producing that red dot is what I call a setup bar. In this case, it's a doji. You can see that. That's the last bar. We have a setup bar. So we should be in the lookout to enter a short trade. All right, once we have a setup bar, we need a trigger bar. The trigger bar, in this case, is the bar following the setup bar that trades one tick above the close of the setup bar. Remember, we're going short, one tick better than the close of the setup bar. When we're going short, it's going to be, has to be one tick above the close of the setup bar. Here it is, the next bar. We have the setup bar, which is the bar that gave us the reversion TE first dot. We don't care about any subsequent signals. We only care about the first one. And then the following bar trading one tick above the close of the setup bar. As soon as that happens, we get a short signal popping up on a screen along with two arrows telling me this is the bar the signal's appearing upon, this is the price, and my position should be -2, in this case telling me I should be short 2 contract. Again, once we are in a short position, to exit that short trade without talking about the stops again, which I promise I will cover, let's expand the chart and see how we exit the trade. To exit the trade, one more time, we have to pay attention to the exit indicator, reversion exit indicator, which is the bottom indicator. We want the market to move lower, and we want our exit indicator to move lower all the way to -1 reading or a green dot. Whenever that happens, the bar responsible for producing that reading on the reversion exit is my new setup bar to exit that short trade. Once we have a setup bar, which is the bar produce the green dot on the reversion exit, we are looking for a trigger bar. A trigger bar is the bar following the setup bar, as you know by now, but we wanted to trade one tick below the close of the setup bar, one tick better. Here it is. As you can see, the last bar traded one tick below the close of the setup bar. Here is my setup bar, and here is the following bar trading one tick below the close of the setup bar. As soon as that happens, an exit signal pops up on the screen telling me my position should be flat, and the trade is complete. Again, we did not talk about the stops. All we talked about is the mechanics of entering a long trade, how the strategy generates long trades, how the strategy generates exit the long trade, how the strategy generated a short trade, and how exited the short trade. Next, I want to explain to you exactly what kind of risk management we use to trade this strategy. I just want to make a comment here before we proceed into the risk management, and that is when we pay attention to the indicators, reversion TE or reversion exit, if we get more than one signal, the strategy will not double up. So here's an example that we have a long signal based on reversion TE giving us a green dot, but 1 bar later we have a second green dot. The strategy does not double up. Same one here. We have a short signal. We have a second short signal coming in 1 bar later. The strategy does not double up, right? If I move forward, you can see the same thing over again. Here's one more long signal based on reversion TE. 3 bars later, we have one more long signal, but the strategy does not double up, even though the second long signal came in at the bottom of this bar right here. Again, the strategy does not double up. Okay, let's talk about the stops now. This is really important. This is the most important part of the presentation. Where do we place our stops? All right. For example, you can see here a trade. We went short based on reversion TE, giving us a short signal. Market went our way, went against us a little bit, came down. Reversion exit told us to get out, and the strategy got out at a break even. We did not get stopped out. Let's move forward here. As you can see, long trade. As I said, reversion always trading against the trend. As the market's moving lower, it's picking these lows and taking a signal in the opposite direction of the overall trend. Market's moving higher, it's trying to go short. Market's moving higher, it's trying to go short. Market moving lower, it's trying to go long. And let's find a losing trade. Here is one. Here we found ourselves a losing trade. Let's take a look at this losing trade and see if we get stopped out and how much we're risking for that trade. Now, in this trade, the market was moving lower. Reversion TE gave us a long signal right here, right? Next bar traded one tick below the close of the setup bar. A long signal popped up on the screen. Market moved a little bit up, then it started moving against us. Finally moving up a little bit. but we end up losing 3 ticks in this trade. We got out based on reversion exit. If you look at it here, there's nothing different between this trade and this trade. This is a long trade also, right? This trade here, market moving lower, give us a green dot on reversion TE, got out based on reversion exit. Let's compare these two trades. Long signal based on reversion TE green, long signal based on reversion TE green. Exit based on reversion exit red, exit based on reversion exit red. There's nothing different between these two trades. They're both longs, except this was a winning trade and this trade was a losing trade, right? Now, as you notice, we didn't get stopped out in this trade. We got out based on the rules, and that is reversion TE told us to get out. We did not get stopped out. Now, that what I'm trying to say is it's possible to have a trade based on the rules and yet the result of the trade be a losing trade. Having said that, I still need to have stops. I cannot let the trades go against me forever, waiting for reversion TE, for reversion exit to come in and to take the trade out with a limited loss. So we need to have a stop. Every single trade has a stop. Where do we place this stop? This is the most important part of the presentation. So let me explain to you exactly what kind of setting I use to limit our losses. To do that, I'm going to take you to the performance page so I can explain to you the risk management settings. So please pay attention to this risk management settings. This is very, very important. Many professionals use this kind of settings. Unfortunately, not many non-professionals do. Therefore, the result is not very good for these people who don't use this kind of a setting. Let me explain to you my risk settings, and I will go in details about them. All right. On my performance page on the website, you see in the risk settings we have 2 different settings. One is aggressive, one is balanced. In the aggressive settings, we say we have $600 daily stop loss with no profit target per contract. Folks, the operative word here is daily. $600 daily stop loss with no profit target. What does that really mean? It means that at any given point in time during my trading day, if the strategy loses $600 total per contract based on cumulative results, that's all day long. It could be a result of 1 trade or 15 trades. It doesn't really matter. If the strategy's total results for the day or my trading day equals $600 total, then we get stopped out. Now, because the stop is a daily stop, that means we can only get stopped out once a day. Once we get stopped out, there are no more signals for us rest of the day. Let me repeat that. The stop that we're using is a daily stop. Every single trade has a stop, but the calculation of that stop is based on total amount of money we're willing to risk per day, per contract on a cumulative basis. So it's possible for me to make winning trades or losing trades, but at any given point in time during the day, if the strategy loses $600, let's say, then the strategy will stop us out and it will no longer gives us new signals for the remaining of the day. No more trades for the rest of the day. We get stopped out. So basically what I'm saying is we're defining our total risk per day, per contract, before even we start trading for that day. So when I come in the morning, when I come into the office in the morning, I know ahead of time how much money I am willing to risk total for that day, depending how many contracts I'm trading. Okay, since we're at this page now, let me explain to you my other setting. We have 2 settings, as we saw. The second setting says balanced, right? Balanced setting, we're saying we have $300 daily stop loss per contract, and we have $300 daily profit target again per contract. So we're saying is not only we're going to stop trading if the strategy reaches $300 per contract loss, we're also going to stop trading if the strategy makes a profit of $300 per contract, whichever comes in first. I personally am not a fan of capping profits, but some clients love this, so we do have it in place, just so you have an idea. So again, these two settings are not really written in stone. You can go anywhere in between aggressive or balanced, anywhere from 600 to 300. You don't want to go below $300 per contract. You're not giving enough room for the strategy to work. And you don't want to go more than $600 either, since if you go more than 600, the results aren't going to make much difference anymore. You don't get stopped out that often anyway. Okay? Again, since we're on this page, let me go ahead and explain this performance page before we move on and show you some other trades. These results, as you see, are based on two E-mini S&P contracts, and that's why when we're trading, you see the number 2, right? Long 2, buy 2, sell 2. And they include commission and fees, $5 per contract round turn. Now, as we see here, we have three different settings when it comes to market hours, right? We have 24 hours, U.S. market hours, and European market hours. Let me explain to you the difference. 24 hours is basically just that, when we run the strategy live onto 24-hour-a-day market. As you know, ES is open almost 24 hours a day, so we run the strategy live 24 hours a day, or almost 24 hours a day, and whenever the market is running, the strategy is running, and we post the results on a daily basis. So the results are posted once a month on a daily basis, but I'll show you what I mean by the daily basis in a second. But of course, that's kind of unrealistic. Not many people can trade 24 hours a day. So if you want to see what the market's doing during U.S. market hours only, this is U.S. cash market hours only, namely from 9 o'clock in the morning till 4 o'clock in the afternoon Eastern time. You can see the results are a little bit different because we're trading less hours, right? So the results are a little bit different if you're showing only U.S. market hours versus 24 hours a day. If you click on the European market, now this is, again, we're trading the ES. We're not trading any European market. We're not trading the DAX or the FTSE. We're still trading the ES. However, we're trading them only during European market hours, European cash market hours, namely from 3 o'clock in the morning Eastern time till 11:30 in the morning Eastern time. As you can see, there's some overlap between the European market hours and U.S. market hours, right? European market hours close at 11:30 in the morning, while 2 hours before that, already the U.S. market opens in New York or in Chicago. All right, so these are the result of if you run the strategy only during European market hours, the results are going to be a little bit different from the U.S. market hours or 24 market hours. Now again, you can see two different strategies, the reversion and momentum. Now interestingly enough, if you click on any one of these, you will give you the daily results. So let's go ahead and click on October, for example. You can see the results for October. Here they are, daily results. October was not the best month, even though it shows us really having not bad of a month, but we got stopped out on October 17th. We got stopped out on October 11th. We almost got stopped out on October 7th, almost 3 times, let's say, right? Why 1,200? Because we're trading 2 lots. Remember, that's $600 per contract times 2, $600. Yes, we did get stopped out 3 times in October, but then we had some good months too, and the result has been $9,000 based on 2 contracts. If you look at September, here we go. We never got stopped out. Just about got stopped out on September 6th, right? Not bad, but the result is not really that much difference from October. Here's we go to May, which is really, really bad month. We barely broke even on reversion strategy. If you look at it, here we go. It was not a good month at all. We got stopped out on May 31st. We got stopped out on May 24th. We got stopped out on May 22nd. We almost got stopped out on May 14th. Almost 4 times, let's say, we got stopped out in May, and the results reflect that. What I'm trying to say is, don't judge a strategy in one day or 1 month. Some month is not going to be the best. Some month is going to be really great. You don't know. We have no idea what the strategy is going to be doing. All I know that the strategy gives me an edge when it comes on a long-term basis. That's all I care about. Okay? Now, finally, I just want to say the results you see here are results of post release data. We released these strategies back in December of 2011, right down here. December of 2011, the strategy was released to the public. Once we release the strategy, we have not changed a single iota. Whatever settings we have are the same settings. So we run them every single day live into market, and whatever results we get, we post. So these are post-release data. So in a way, you could say these are forward testing results as opposed to back testing results, because once we release them, we start running them live, and these are the market results we've been getting since the release of the strategies. Okay, now let's get into this question and answer session. I've got a lot of questions that have come over, and we've got a list of worked out here and the most common questions. If you have a question that doesn't get answered in this session, I'll try to answer it right after this webinar is over, so stay tuned. We're getting the questions together here. Let me answer some of the most common questions. Are your strategies optimized? No, the strategies are not optimized, and I said earlier, once we released the strategies back in December of 2011, we have not touched the strategies. The strategies do not get optimized. I don't change the criteria of the strategies. So whatever you see, that's exactly what we're getting every single day, every single month. What platforms do your strategies work with? They work on Ninja, Trader, and TradeStation. These are the two platforms the strategies are compatible with. But I said, if you have neither one of them and you still want to get the results of the strategies, you are more than welcome to come to one of the two rooms that we have. And the reversion strategy along with the high frequency trade levels are open 24 hours a day. And then we have also the hybrid strategy session, which is open during the US sessions. So you can get the strategy signals from these two rooms. Once I purchase your strategies, what kind of training do I receive? Well, you will get access to both of our rooms when you get the strategies, depending which strategies you get. If you get all three of them, the reversion, momentum, and the hybrid, which I have not talked about yet actually, you will get access to the room, and in the room we will explain the strategy during live market settings, so you'll see the strategy live as I and my associates are in the room all day long going through the trades, every single signal at a time. So you will get plenty of training, but most importantly, outside of the trading rooms, you also have access to me one-on-one, and that is unlimited support. I'm not putting any time frame on that. So 2 years from now, 3 years from now, it doesn't matter how long down the road. If you have questions for me regarding the strategies or regarding in trading in general, I am available for you. I still have people who come to me from literally 4 or 5 years ago that I work with. They still contact me, and we spend some time one-on-one session with them. So if you want to spend some one-on-one session with me, look at me as your personal mentor. I'll be more than glad to spend as much time you want to explain the strategies and to explain to you about trading in general. Can your strategies be auto-traded? Yes, they can be auto-traded, but I strongly recommend against them. Even though they're completely automated, I still think trading them manually gives you an advantage, and that is because the human intervention along with the strategy signals is really phenomenal. So you will see what I'm talking about once we come to the room, and you'll see that once in a while the strategy will give us a buy signal and the market is going straight down. Let's say, I say hold off to the buy for a couple of bars and see how far this market's taking us lower. So we end up doing much better with the strategies telling us to do. Of course, sometimes we're going to miss a trade with that too, but most of the time combining the human touch along with automated strategies far exceeds performance versus the strategies all by itself actually, and we try to minimize slippage by doing that. Do you offer trials on the members room? Yes, we do. So if you want to come into the members room and you spend a couple days with us, look at the strategies, see how the strategies are working, feel free to email us, and I'm going to give you the contact information at the end of the webinar, and we'll be more than glad to accommodate you. You spend all day with us, couple of days, 3 days, and you'll see how the strategy signals are being developed live. Do you guarantee the results of your strategies? No, I cannot guarantee what the strategy's results going to be tomorrow or next week or next month. Legally, I am not, I will not be able to do that, so I cannot guarantee the results of the strategies. But what I do guarantee is the results that are posted, that all results that the strategy have generated with the same settings without changing a single setting going back till December of 2011. That I can guarantee. What do I receive after I purchase the strategies? Well, you will get the strategies software, of course, so it will help you install the strategies on your computer. We'll walk you through it step by step. Then we'll give you the training. You'll get the book. Then we'll walk you through the training. We'll do one-on-one training with you and in the room. And so you have access to the members room, both rooms. And you have, as I said, access to one-on-one with me as long as you want it to be. Okay, there's no limit into how much one-on-one training you would get with me. So as long as you want to work with me, I am available for you. What are our best trades and strategies? That's a tricky question. Some people ask, are U.S. hours are the best, European hours are the best, or 24-hour session are the best? It really doesn't matter. The strategies work 24/7. So whatever time you have to trade, that's perfectly okay. The only thing I could say is when the market closes in the U.S. session, for the next 5-6 hours or 7 hours after the U.S. session closes, not much really happens. All markets are closed at that time. European markets are closed. Asian markets haven't opened yet. So usually the markets don't do much during those hours. So most of the time the strategies are working great, except, as I said, between the U.S. close, which is 4:15 p.m. Eastern time, all the way till probably around 8 o'clock or 9 o'clock Eastern time. Can I trade both strategies at the same time? Yes, you can. You can trade the reversion strategy and the momentum strategy at the same time. However, I do recommend for you to trade them in two different accounts. So if you have an account with a brokerage company, all you have to do is just ask them for a sub-account or related account. They're the same thing. So you don't combine both strategy trades at the same time. So you might get a buy signal from one strategy, and 5 minutes later you might get a sell signal for another strategy. So there is zero correlation between the strategies. So it's good for you not to combine the strategies at the same time. You can trade them both, but I would recommend for you to trade them in two different accounts. All right, and that has been the question and answer session. Here is my contact information. It's emini@EminiStrategies.com, and you can see the phone numbers here. If you're you're calling outside the U.S., the number is 818-293-0451, and if you want to call it toll free, but it's only available within the U.S. and Canada, that number will be 888-598-2555. And these numbers and the contact information is available on the website. So you have to do just go to EminiStrategies.com. You would see those contacts. So if you want to have access to spend a couple of days with us in a trading room, feel free to send us an email, and we'll be more than glad to bring you in and spend a couple of days where you can see the strategy signals live in our members room. Okay. Well, again, this has been George Michigan, EminiStrategies. It was great talking to you, and hopefully we can see you in the members room. Take care now.